Being poor is expensive. In fact, it is mathematically more expensive to be poor in America than it is to be rich. This sounds crazy, right? You think, if I'm poor, I spend less. Wrong. If you are poor, you pay a premium for everything. Listen to this scenario. It happens every day. A rich guy keeps $10,000 in his savings account. What does the bank do? They pay him interest. They give him free money just for having money. He gets a premium account with no fees. Now, take a guy who is struggling. He has $5 in his account. A bill hits for $10. His balance goes to -5. What does the bank do? Do they say, hey, buddy, looks like you're struggling. Here's a break? No. They hit him with a $35 overdraft fee. Think about the logic of that. The bank is charging you money, because you don't have any money. This is called the poor tax. It is the invisible cost of being broke. From buying cheap boots that fall apart to paying 25% interest on a credit card because your score is low, the system is designed to extract wealth from the people who have the least of it. Today, we are calculating exactly how much the poor tax costs the average American family. We are going to run the numbers. Spoiler alert, it costs you about $5,000 a year to be broke. I am Dr. Bananomics. Class is in session. Let's peel back the scam. The first major component of the poor tax is what economists call the Vimes boots theory. It goes like this. Imagine a wealthy man needs work boots. He goes to the store and buys a high-quality pair for $100. These boots are leather, double-stitched, and indestructible. They last him for 10 years. Cost per year, $10. Now imagine a poor man. He needs boots for work too, but he doesn't have $100. He only has $20. So he buys the cheap plastic boots from Walmart for $20. These boots are trash. They leak. The soles fall off. After 6 months, they are destroyed. So he has to buy another pair for $20 and another and another. Over the same 10 years, the poor man buys 20 pairs of cheap boots. He spends $400 on boots. Do you see the math? The rich man spent $100 to keep his feet dry. The poor man spent $400 to keep his feet wet. This applies to everything in your life. It applies to cars. If you can afford a reliable Honda, you just pay for gas. If you can only afford a $1,000 beater, you are paying for repairs every other month. The towing fees, the missed shift at work because the car wouldn't start. That is the poor tax. It applies to technology. Buying a cheap laptop that crashes in a year versus a MacBook that lasts for 7. The system punishes you for not having the capital up front to buy quality. You are trapped in a cycle of buying trash because you can't afford quality, which keeps you broke, so you have to keep buying trash. Next, let's talk about the grocery store. This is where the poor tax hits you in the stomach. We all know that buying in bulk is cheaper. That is the entire business model of Costco. If you go to Costco, you can buy a massive pack of toilet paper, 30 rolls for $20. That comes out to maybe 60 cents a roll. But to get that deal, you need 2 things. You need a Costco membership and you need $20 cash up front. If you're living paycheck to paycheck, you don't have $20 to drop on toilet paper. You have $2. So you go to the corner store and you buy a single roll of toilet paper. That single roll costs you $1.50. You are paying almost triple the price for the exact same product, simply because you couldn't afford to buy 3 of them at once. This happens with rice, it happens with beans, it happens with laundry detergent. The rich family buys a year's supply of detergent for $15. The poor family buys the small plastic bottle every week for $5. Over the course of a year, the poor family spends 40% more on groceries than the rich family while eating worse food. It is expensive to have no liquidity. Now, I want to talk about one of the biggest scams in America that targets the poor specifically, rent to own. You see these places in every low-income neighborhood. Get a 70-inch TV for just $19 a week. Get a brand new sofa for just $15 a week. It sounds great, right? You can't afford a $1,000 sofa, but you can afford $15. But let's do the math on that $15 a week. Usually the contract is for 100 weeks. $15 times 100 weeks is $1,500. That sofa only cost $500 at a regular store. You just paid triple the price. You paid a 200% interest rate, effectively. The rich person walks into the store, swipes their card, pays $500, and leaves. The poor person signs the contract and pays $1,500 over 2 years. That extra $1,000, that is money that could have gone into your retirement account. It could have gone to your kid's college fund. Instead, it went into the pocket of a predatory company. This is the definition of the poor tax. And it gets worse when we look at subprime auto loans. This is where the system destroys you. If you have a credit score of 750, you can get a car loan at 5% interest. On a $20,000 car over 5 years, you pay about $2,600 in interest. Not bad. But if you are broke and your credit score is 550, you don't get 5%. You get 24%. On that same $20,000 car at 24% interest, do you know how much interest you pay over 5 years? You pay $14,000 in interest. Total cost of the car, $34,000. The rich guy paid $22,600. The poor guy paid $34,000. The poor guy paid $11,000 more for the exact same Nissan Altima. That $11,000 a down payment on a house. Gone, vaporized, just to service the debt. Now, let's get to the darkest part of the scam, the financial industry itself. If you are rich, people fight to lend you money. American Express sends you a metal card. They give you 5% cash back on your purchases. They give you free airport lounge access. Basically, the bank pays you to use their money. If you are poor or you have bad credit, nobody wants to lend you money, except the predators. Let's say your car breaks down and you need $500 to fix it so you can get to work. You don't have savings. What do? You go to a payday lender. They will lend you the $500. But the interest rate isn't 5%. It isn't 20%. It is often 400% APR. You borrow $500, but you end up paying back $1,200. That extra $700 is the poor tax. It is money that vanished into thin air, providing you zero value just servicing the debt. And let's talk about insurance. Did you know that if you have a low credit score, your car insurance premiums are higher? Even if you have a perfect driving record, the insurance companies say statistically poor people are riskier. So they charge you $200 a month for the same coverage that a rich guy gets for $80. You are literally subsidizing the wealthy. Finally, we have the tax on your body and your time. Bad food is cheap. Good food is expensive. You can get 2,000 calories at McDonald's for $10. To get 2,000 calories of fresh vegetables, lean meat, and organic fruit, that costs $30. So when you are broke, you eat the processed junk. It saves you money today. But in 10 years, when you have diabetes, high blood pressure, and dental issues, the medical bills destroy you. That is the delayed poor tax. And think about time. This is the one nobody talks about. If you're wealthy, you buy time. You pay someone to clean your house. You pay for Uber instead of taking the bus. You pay an accountant to do your taxes. If you are poor, you pay with time. You spend 2 hours on the bus to get to a job that pays minimum wage. You spend Sunday doing your own laundry at a laundromat, waiting for the machine. That is time you couldn't spend studying, time you couldn't spend learning a skill, time you couldn't spend resting so you could perform better at work. Poverty steals your time, which makes it impossible to earn more money to escape poverty. It is a vicious cycle. Okay, Dr. Bananomics, this is depressing. The system is rigged. We get it. What do? Acknowledging the rig is the first step to beating it. You have to understand that the game is set up for you to lose, so you can stop playing by their rules. The only way to stop paying the poor tax is to build a buffer. You need to get to a place where you can buy the good boots, where you can buy the Costco toilet paper, where you can pay for the car repair in cash. This is why the emergency fund is not optional. It is life or death. That first $1,000 in savings is the most important money you will ever make, because that $1,000 stops you from taking the payday loan. It stops you from getting the overdraft fee. It allows you to fix the car before the engine explodes. You have to claw your way to that $1,000 buffer. Sell things, work overtime, eat rice and beans, cancel the streaming services. Do whatever it takes. Once you have the buffer, you stop bleeding. You stop paying the penalties. The system charges a premium for being at 0. Your goal is to get to 1. I want you to get angry about this math. Don't get sad. Get mad. Use that anger to fuel your savings. Every dollar you save is a middle finger to the bank that wants to charge you an overdraft fee. Every dollar you save is a step away from the rent-to-own scam. If you are ready to stop paying the poor tax, smash the subscribe button. We are building a community that refuses to be victims of this math. And comment below, what is the most ridiculous fee you've ever paid just for being broke? Was it an overdraft fee? A late fee? Let me know. I read every comment. Let's expose the scam together. This is Dr. Bananomics. Class dismissed.